And we are back on Halftime with Josh Brown's best stocks in the market. Josh, what are you focused on today?
So one of the things that I think is relentlessly fascinating about the markets is how easily price can change your mind. And so when we saw gold earlier in October making the gold stocks making all-time highs along with the price of gold, everyone said, all right, this looks overdone, or I missed it, or I'll buy it on the dip. Well, the dip is here. Newmont Mining is now in a 20% drawdown from that high and still in a longer-term uptrend. So for all the people who said, I can't believe I missed it, I'll buy the dip, congratulations, here we are. Who wants it? Not many people. It is now below its 50-day, which is where historically it had found support the entire way up. And so far, this wrestling match looks like the Bears have it. You could say the same thing about Anglo Gold Ashanti, AU, also on the best stocks in the market list. The third, which we talked about, Southern Copper, that pullback actually looks more orderly, and that one's actually holding its rising 50-day as well. So I think I'm just pointing out here, these are strong stocks and big uptrends. Over the short term, they're finally pulling back to more reasonable levels. Some of that froth is coming out of these trades, possibly because they got caught up in a lot of momentum portfolios because of how well they were doing. Now, if you felt like you missed it, now's your opportunity. I'd be taking a look at all three of these right now.
You know, Josh, you point to what could be, I guess, another catalyst for these names longer term, the fact that we have low oil and gas prices and the fact that we're going to see a slight production increase from OPEC. It seems like it would keep those prices low. Can you kind of explain that thesis really quick?
Yeah, one of the key input costs to operating a gold mine is energy prices. And so long as energy prices remain low and the price per ton that they can sell of gold, silver, copper remains high or elevated, that bodes well for profit margins next year, which obviously flows down through to earnings per share. So these companies probably are on pace to report some of the most profitable quarters they have ever experienced. That explains why these stocks have done so well this year, because the stock market is already anticipating that. However, that dynamic probably doesn't change very much so long as oil stays low and gold prices remain somewhat elevated. So if you were looking for an opportunity to buy a dip in a bull market, there aren't that many of them in gold over the last year. This is the opportunity.
All right, Joe, you also own Newmont. Your take on just the idea of this company and that trade?
Well, I agree with Josh. If you're looking for the opportunity to get into precious metals, which have had a very strong year, okay, you're in the midst of right now a correction. Just be prepared and understand that that correction can continue. So you might be buying and have to incur a loss on your initial purchase. You're buying for the long term here. For the month of October, and really for the fourth quarter, let me better state, you're seeing that the U.S. dollar is actually rallying. U.S. dollar is up about 2.5%. That's having an effect on commodities. It's having an effect on silver and gold and copper itself. So I think a lot of that is coming into play. I also think there was a degree of exuberance. I sent a report to a good friend of mine, natural gas trader Daniel Fisher, and it was saying in the report that big trading companies, commodity trading companies, were looking to hire gold traders globally around the world. He remarked back, well, maybe that's the sign of the top, and I think Daniel's right on that.
All right, gold pulling back just about 1% right now.